This seems to be, at least in markets, for people in finance, one of the most interesting questions. Why have you slowed down your share buybacks? You were doing $2.75 billion a quarter, and now you're doing $1 billion a quarter. Can you meet your target?
Good morning, Matt. Yeah, indeed, you're right. We are slowing down our buybacks this quarter. I think if you look back at last quarter, of last year rather, it has been quite a volatile year. Altogether, we didn't have a bad performance at $47 billion of cash flow and $12.3 billion of cash flow in the fourth quarter. But indeed, there are macroeconomic headwinds. We have to get three things right. We have to continue to invest for growth. We have to buy back $25 billion of shares for starters, and we have to reduce net debt. I think with the outlook that we're seeing at the moment, and you pointed at it already, pressure on oil prices, definitely pressure on NGL, gas prices, refining margins, chemicals really at the floor. We just have to take a prudent look going forward. So for this quarter, we said, let us bring back our share buybacks to 1. Let's focus a bit more on debt reduction in the beginning of the year. Let's see how the macro plays out. But let's also be very clear, there is no change in our commitment to buy back the $25 billion. It is just that the pace is a bit uncertain given where we are with the macro.
If the pace is uncertain, is there any uncertainty around that target? Will it all happen this year, Ben? Because if you want to get to 25 and you're only doing 1 a quarter, might you be in danger of missing that $25 billion target by year end?
Well, Anna, it is indeed all about the macro. If you just look back when the macro started to go soft, which was in the middle of last year, if we wouldn't see any recovery, and we have seen some worsening and some recovery, but on average not really a recovery as such, we would probably have to count on $7 billion less cash flow to work with. That is a material amount. So if we don't see any recovery in the macro for this year, yeah, I think we will probably see the $25 billion slipping into a later period. It's all uncertain, of course. It depends very much on how the macro plays out. At the same time, though, of course, we need to also provide some self-help. So we are going to invest at the bottom of the range that we have set to the market. So again, $24 billion is the bottom of the range, which is where we came out last year as well. Discipline on cost, doing the right things. But at the same time, the macro is just going to give us what it's going to give us, and I cannot change that.
We're only a month into 2020, Ben, but what is your take on the macro picture, especially with the coronavirus and the implementation of basically quarantines of million people cities? How does the macro picture look to you?
I think, of course, the coronavirus is a very concerning situation, and I'm sure there's a lot of people very anxious, of course, about what is happening to them directly or indirectly. And of course, our sympathy and thoughts are with it, and we are monitoring very closely what that means for us. Also, of course, what it means for us economically. At the same time, Matt, we're still very early on into this episode. We don't quite know yet how fast this will continue to spread. We don't know exactly what sort of mortality rates are there. So comparisons with SARS, which I understand, of course, are being made, are still a little bit premature. But what we can be certain of is that it will not help sentiment on demand, even though the impact on demand is probably unknowable and most likely not that big. The sentiment will certainly drive down oil prices, gas prices, etc. We have to deal with that. That is part of the uncertainty that also makes us wanting to be a bit more prudent on the pace of the buybacks. But at the same time, of course, we're not strangers to uncertainty. It means that our investment decisions have to be resilient. And if you look back at 19, we took investment decisions with a break-even price on average of less than $30 a barrel. Now, that needs to be our outlook going forward as well. And we need to make sure that we run our ship as tightly as possible in a period where the uncertainty will probably give pressure to the downside.
Can I ask you about the environmental agenda, Ben, because this gets a lot of attention recently. Repsol making a promise to be totally carbon neutral by 2050. Do you need to set, at Shell, do you need to set a carbon neutrality target?
Very good question, Anna. And indeed, there's no doubt that pressure around climate change, the energy transition, is growing. We welcome that. We think it is needed. I think we need to be prepared as a society to do unprecedented things in the years to come. I personally believe 2020s is going to be the decade of truth in that respect. And that means that also companies like us need to be really understanding where they can make a difference. And in my mind, that really means working with the different sectors that we serve to understand how we help decarbonizing them. Because ultimately, we have to bear in mind, of course, that carbon emissions, by and large, are being driven by the demand for energy, not the supply of energy. And therefore, we need to work on reforming demand so that supply can reform as well. Now, the different ambitions that are being put out there are all slightly different, with slightly different methodologies. We have to also, I think, as a sector, bring a little bit more harmony into that so that these methodologies and numbers and claims and ambitions are a bit more comparable. I can tell you, we want to be absolutely at the forefront of doing this. We want to have a portfolio that transitions completely in line with how society needs to transition on its way to Paris.
Ben, for the old guys like me, you know, your work over the past decades with Ferrari and with Ducati is enough to drive me to the red V-Power pump. What are you doing along those lines for the kids who aren't watching MotoGP, who aren't watching Formula One? What are you doing for this new generation?
Well, I think thank you very much for being a loyal customer, Matt. And indeed, we have quality fuels. And by the way, if you look at Ferrari, if you look at, for that matter, Formula One, what a lot of people don't realize, of course, is that these are the most energy efficient engines we have on the planet. Quite often that is not quite understood. But yeah, I think for the new generation, we have to be in electric racing. And we are. We are in Formula E. We want to play a leading role in there as well. And of course, it is not just about attracting people through our sponsorship and our involvement in developments in motorsport. We also have to put out a very clear image of a progressive company that is really not just moving with society, but even helping society to move along at a much higher pace. I think that is a new paradigm in our industry, and I think we have to also reinvent the way we present the company. It is surprisingly hard to present a company different than just an oil company, even though, you know, less than 50% of our investment actually goes into the upstream. But we have to be more imaginative, and we have to show more clearly what we stand for and how we make a difference in today's world.
And Ben, on that subject, what kind of conversations are you having with investors in 2020 that you were not having last year? How has that conversation with the investment community really changed?
Well, my first big roadshow will be tomorrow morning, Anna, so I will be able to tell you a little bit more tomorrow. But I suppose, indeed, the conversation will move on. I think investors are, of course, also thinking very deeply what their role is in the energy transition. And I think that role is gradually being clarified. I still think there is a very large part of the investment community that feels that somehow being associated with carbon may not be the right thing. But there is also the more thoughtful part of the investment community that dialogues with us and tries to understand how players like us are going to be the solution providers in the years to come as well. And you know, you have to bear in mind the transition, if you think about it, and we don't have time to lay it all out here, is going to be so massive that it very quickly becomes obvious that it can't be done by startups. It can't be done by just the smaller users of energy. People like us have to be part of that solution as well. And the better discussions I'm having with investors these days are the discussions where we figure out what our role needs to be, how we can actually help the sectors that we serve to decarbonize, how our investors can help also work with our customers to sometimes put pressure on them as well, to make sure that we collaborate together to have more targeted policy asks to governments to help us decarbonize collectively. And I think that discussion is really growing up. I hope it will really take off in 2020, and I hope COP26 at the end of the year will really set the scene for that sectorial approach.